Good morning, everyone. It is 9 a.m. on June 26, 2024, and you're tuning in for the Colorado Public Utilities Commission's weekly business meeting. Good morning, Commissioner Plant. We are missing the chairman today, but we're gonna go on without him as he's out of the office.
Good morning, Madam Chairman. Good to see you this morning.
Good to see you as well. Commissioner Plant, do you have any initial remarks, or would you like to vote on approval of the consent agenda today?
I would vote to approve the consent agenda.
All right, as would I. Thank you. So the first item up on our discussion items is proceeding 24AL-0154G. Mr. Lemaire, and Mr. Lemaire, you have several on here. So just let me know how you prefer to take those individually or as a group.
Yeah, good morning, commissioners. I think it would be most effective to take them individually because they are individual utilities. So if that works best for you, I'll proceed with the first item on the agenda.
That sounds great. So kick us off with Public Service Company of Colorado's revision to its gas tariff to increase its gas DSM cost adjustment.
Great. Just for the record, my name is Patrick Lemaire with your Economics and Financial Analysis section. On April 1st, 2024, Public Service Company of Colorado filed a Vice Letter number 1032 seeking to revise its gas demand-side management cost adjustment, otherwise known as the DSMCAG rider, to be effective July 1, 2024. This is a standard filing that the company makes semi-annual in April and October to reflect, one, the undercollected balance in the gas DSM deferred account from 2023, plus associated interest under the gas DSM tracker. Two, the gas DSM bonus and acknowledgement of lost revenue values, or ALR, for 2023. And three, the gas DSM program budget, which was approved in the company's DSM plan decision number C230381. At the end of 2023, Public Service had an undercollected balance in the residential gas DSM deferred account of $2.4 million, including interest of $179,000, and Public Service had an overcollected balance in the non-residential gas DSM deferred account of $605,000, including interest of $26,000. The proposed tariff recovers the 2023 gas DSM bonus of $5.1 million and the ALR value of $2.8 million. Additionally, the gas DSM rates reflect the 2023 gas program budget of $25.1 million. Of that budget, $22.8 million is associated with the residential programs and $2.3 million is associated with the commercial programs. The effect of this filing on the company's customers is an increase in the DSMCAG rate for residential customers from 5.6.5% to 6.51%, or a 27 cents increase, and a decrease in the current DSMCAG rate for commercial customers from 2.33% to 1.31%, or a $1.23 decrease. The tariff would become effective again July 1, 2024. At this point, I'll pause here for any questions or discussions you may have, or I can proceed to a recommendation.
Thanks, Mr. Lemaire. Commissioner Plant, would you like to hear a recommendation?
I would vote to approve.
Okay. As would I, Mr. Lemaire. Just kind of a broad question for you. I know we have a lot of DSM cost adjustments on the agenda today, and we dealt with one, I think it was last week, on Public Service Company, where UCA had filed a protest just looking for in part additional transparency, or the commission had decided to order some additional reporting and transparency in the next proceeding of that type. And just wondering if you see that as kind of a issue across the board where additional detail in these filings would be helpful for staff to be tracking them, versus what's approved, or if that doesn't seem to be, a major issue y'all are dealing with right now. That would just be helpful for me to maybe understand.
Yeah, sure. And as I understand it, last week's deliberation was in regards to the public service electric DSMCA filing and the associated allowable budget under their associated DSM plan that was approved in 2023. What I can provide is that was certainly a unique case, and the deliberations were sound and necessary in that case, especially if a budget is in excess of what is allowed for utility, especially in excess of a specific cap. I will provide that the current commission rules do provide an outline of the gas cost adjustment filings. And with that, and with this filing in particular, the company provided exhibits to show how the DSMCA was calculated. Additionally, each utility is required to provide an annual report, which provides the expenditures at a program level. So each program within the DSM plan for future years and historical years, and also any TRC values or evaluation, measurement, verification processes. So it's a bit of a loaded question, certainly. I do believe that we have substantial reporting requirements out there already for each utility, in which they are required to adhere to in their DSM annual filings and within the DSMCA. I do believe that enhanced reporting never hurts, especially in light of the DSM proceedings overlapping certainly with potential clean heat plan proceedings or gas infrastructure proceedings. So I think it needs to be done on a case-by-case level, and there's certainly avenues already that exist, like the required DSM plan or any future overlap, like I mentioned with the clean heat plan, where that could be a litigated proceeding to discuss the DSMCA a little further. So I know loaded answer there, but there are currently existing reporting requirements that exist for each utility, and there are avenues in the future where there's potential to enhance them or modify them.
Thank you. Thanks for helping my understanding of that, especially as we saw that issue come up pretty recently. And then I saw these on the agenda. I was wondering how widespread is that problem, but I agree with you. It seems we have some avenues through the open plans if stakeholders see that as an area that needs to improve, where those discussions could be had. So really appreciate you taking us through that and your review of these. So I agree with Commissioner Plant on approval of 24 AL 0154G. So if you wanted to move us on to 24 AL 0155E, which is Black Hills Electric.
Yeah, sure. Thank you. So moving on to the next proceeding on today's agenda, which is Black Hills Colorado Electric's DSMCA. So I'm here to present the advice letter number 868, filed on April 1st, 2024, and to be effective proposed for July 1st, 2024, for a period of 12 months. Black Hills Energy seeks to approve and revise its DSMCA. This is a standard filing made semi-annually in April and October to reflect the 2023 financial disincentive offset, the 2023 performance incentive, and any over or under collection of prior costs of the prior year. Black Hills' most recent DSM plan was approved by the Commission in proceeding number 21A 0166E for program years 2022 through 2024. The proposed DMCA rate is 3.03%, which represents an increase of 0.75% from the existing DSMCA rate of 2.28%. The majority of this 0.75% increase in the DSMCA rate calculation can be attributed to the inclusion of the company's authorized recovery of performance incentive. They've provided their calculation in the Appendix C of this proceeding. If permitted to go into effect on July 1st, 2024, the tariff revisions will increase annualized revenues by approximately $1.9 million. Based on the proposed increase, the average residential customer's monthly bill with an average usage of 600 kWh per month will increase by 92 cents from $118.18 to $119.1. The average small commercial customer monthly bill with an average usage of 2,300 kWh per month will increase by $2.09 from 392.87 to 394.96, or 50.53%. The DSMCA is formulaic in nature. Staff has reviewed all calculations and documentation submitted with this advice letter and found no issues. I will again pause here for any questions or discussion you may have, or I can proceed to a staff recommendation.
Go ahead with your recommendation. I think you can do so in each of the following items when they come up as well.
Okay. So staff recommends that the commission take no action and allow the advice letter to go into effect by operation of law.
Commissioner Plant.
I agree with the recommendation.
I also agree with the recommendation, Mr. Lemire. Next up, we have proceeding number 24 AL 0212G, which is Atmos Energy Demand Side Management. Go ahead.
Okay, yep. Moving on to the next proceeding on today's agenda. I'm presenting advice letter number 615, filed by Atmos Energy Corporation, seeking to revise its DSMCA. This filing, submitted on May 15th, 2024, is intended to be effective July 1st, 2024, for a period of 12 months. Atmos's DSMCA is a standard filing reflecting the prior year's DSM performance. The company continues to operate its DSM programs under its 2022 plan, approved in decision number R190754. The company's next DSM plan will cover years 2024 through 2028 and will be informed by the ongoing proceedings and third-party evaluations. The company requests to recover the 2024 budget for the gas DSM programs, any under or over collected cost, a lost revenue amount of $10,280, and a DSM bonus. In 2023, Atmos achieved 123% of their planned savings goals, utilizing 113% of the budget, resulting in net economic benefits of $300,000 and a DSM bonus request of $12,067. The proposed DSMCA rates are as follows. Residential base rates would decrease from 47 cents to 32 cents, with volumetric rates increasing slightly, and commercial rates increases from 38 cents to 41 cents, with volumetric rates increasing slightly again. The DSMCA is formulaic in nature. Staff has reviewed all calculations and documentation submitted with the advice letter and found no issues. Staff recommends the commission take no action, allow the advice letter to go into effect by operational law.
Commissioner Plant.
I agree with the recommendation.
I also agree with the recommendation. On to your fourth item, Mr. Lemire, proceeding 24 AL 0250G, which is Colorado Natural Gas Demand Side Management.
Yes. Okay, so moving on to the next agenda item, which is advice letter number 137, filed by Colorado Natural Gas Incorporated, or CNG, seeking to revise the DSMCA rider. This filing was submitted on May 30th, 2024, and aims to adjust the DSMCA rates to reflect companies' updated investments and energy efficiency measures, and would be effective July 1st, 2024, for a period of 12 months. The DSMCA filing aligns with the company's 2022 DSM plan, approved in proceeding number 19A of 222G. More recently, in decision number C22-0224, the company was granted a partial variance, allowing it to continue its ongoing DSM programs. Its most recent DSM for 2024-2025, along with its future strategic issues application, was approved by the Commission to settlement in decision number R24-0011. The company is requesting to revise the DSMCA rates for residential, commercial, and large commercial customers and recover the associated costs associated with the DSM programs, including lost revenue component and a DSM bonus value. This advice letter will replace Colorado Natural Gas PUC number 2, 9th revised sheet number 28E. Quickly, the cumulative effect of the DSMCA rate changes to the company's revenue across its divisions would see increase in each division, each of the 4 divisions of the company. The results is a total increase of $171,000 in annual revenue. For calendar year 23, the company reported a combined residential and commercial undercollection of $139,980. Consequently, each customer class and rate area will have an estimated increase in the DSMCA on their estimated monthly bill. The DSMCA is formulaic in nature. Staff has reviewed all calculations and documentation submitted with the advice letter and found no issues. Staff recommends that the commission take no action and allow the advice letter to go into effect by operational law.
Commissioner Plant.
I agree with the recommendation.
I also agree with the recommendation. So Mr. Lemaire, I know you have a 5th item. Do you want to take it right now out of order, or do you need a quick break?
We can continue. That's fine with me.
So we'll just skip to agenda item number 6 for a moment so we can complete Mr. Lemaire's run here, which is proceeding number 24 AL0258G regarding Black Hills, Colorado gas DSM.
Okay, great. So as mentioned, this is proceeding number 6 on today's agenda, and it is the advice letter number 47 filed by Black Hills, Colorado Gas Incorporated to revise its gas demand side management cost adjustment DSMCA rider. The filing was submitted on May 31st, 2024, and is intended to be effective July 1st, 2024 for a period of 12 months. Black Hills Energy's DSMCA filing aligns with the programs and measures approved in their 2021 through 2023 DSM plan. The company's most recent DSM plan and strategic issues for 2024 and 2025 were approved by the Commission by unanimous settlement agreement in decision number R240143. Additionally, a motion for alternative form of notice was granted by the Commission in this proceeding in decision number C240412I. The company is requesting the DSMCA take effect on July 1st, 2024, and will update the tariff revision numbers 13 through 25 and 53. For residential customers, the DSMCA factor will decrease from 8.1% to 6.46%, while the non-residential customers will increase from 8.1% to 9.38%. The tariff revisions will result in annualized DSM revenues of $6.9 million, representing an increase of $374,000 compared to its current DSMCA rates. The average monthly residential bill will decrease by 19 cents or 20%, depending on the base rate area and the GCA region, while the average monthly small commercial bill will increase by 5 cents or a 3% increase depending on the base rate area and GCA region. The DSMCA includes 2023 lost revenue calculation of $181,000. The company did not seek an approval for a DSM bonus for the 2023 program year. The primary purpose of the filing is to revise the DSMCA to ensure continued funding of the gas DSM programs. The DSMCA is formulaic in nature. Staff has reviewed all calculations and documentation submitted with this advice letter and found no issues. Staff recommends the Commission take no action and allow the advice letter to go into effect by operational law.
Thanks, Mr. Lemaire. Commissioner Plant.
I agree with the recommendation.
I also agree with the recommendation. Thank you very much, Mr. Lemaire.
Madam Chair,
Commissioner Plant.
I had one clarification. I think on the first one with public service, my vote was to approve, and it should have been to take no action. So I don't know if that needs to be clarified.
Okay, we will notice such, and I agree with you in accordance with Mr. Lemaire's other similar recommendations in the other proceeding. Appreciate it. Thanks, Commissioner Plant. Falling apart without the chairman. All right, thank you, Mr. Lemaire. Appreciate it. Next up, Mr. Duncan, proceeding 24 AL0257G, an advice letter from Black Hills, Colorado regarding their gas cost adjustment rate.
Good morning, commissioners. Can you hear me?
Yes, we can.
Alrighty, thank you. On May 30th, Black Hills Natural Gas filed an advice letter for their gas cost adjustment changes for quarter 3. And on June 20th, they filed an amended advice letter clarifying a couple of clerical errors and outlining a plan to address their upstream purchases. The total increase requested is somewhat large. They're requesting about $30.5 million increase for based off an annualized revenue, and that would be about $6.5 million in the Central Division, about $11 million in the North and Southwestern Division, and about $12.5 million in the Western Slope Division. Staff was a bit concerned when we received these. Q3 is typically a pretty low heating quarter. Most people don't run their heat in the summer. And we had met with UCA and Black Hills to discuss what's driving this. After looking at some of their GCA model, the sort of the guts of the financials, it appears that the commodity costs were actually quite reasonable compared to what's on the NYMEX futures market. However, their upstream costs are much higher. I think that the upstream difference is illustrated in quarter 2. They shipped about 500,000 decatherms in the north and southwestern region. That cost them $2 million. In quarter 3, they plan on shipping 250,000 decatherms, and it's still going to cost them about $2 million. To address this, Black Hills feels that if they base their upstream costs on a rolling yearly basis, that will provide a bit more certainty for upstream costs and presumably lower upstream costs for customers. And they plan on submitting this application early in Q3. Are there any questions, or would you like me to move to my recommendation?
Why don't you go ahead with the recommendation, then we'll go to Commissioner Plant, see if he has any questions.
Staff recommends to deem the application complete and to allow the advice letter to become effective by rule of law.
Commissioner Plant.
I would agree with the recommendation. I just had a question. Do we know what's causing the increase in the upstream costs? Is it something that's avoidable, or is it?
Yeah, Black Hills seems to think that if they structure their upstream purchases similar to the way public service does, that will lead to lower costs. I believe they're still in their first year of doing GCAs quarterly as opposed to annually. So they feel if they structure their upstream purchases on an annual basis, that it will lead to, excuse me, at the very least, more stable costs.
Yeah, I get that it would sort of even out the costs because it would be annualized, but I'm just wondering you identified a pretty significant change in the upstream costs between the third quarter and this, and I'm just wondering, was there anything driving that increase in the upstream costs that we could identify, or something that we might be able to address?
Nothing. There's nothing specific that I'm aware of. I apologize.
Thanks.
Yeah, Commissioner Plant, you done? Maybe I could take a vote from you.
Oh, sorry, I started. I support the recommendation.
Okay, perfect. I don't want to mess up a second time. That's enough. So Mr. Duncan, yeah, I guess I have like a similar question to Commissioner Plant, in that it seems as though restructuring moving forward could help smooth out, but it also seems like there's been some dramatic increase from Q2 to Q3 with regard to the upstream, and it's hard to understand. Has something changed? Like, are other LDCs facing similar issues? Doesn't seem so, since we're seeing GCAs go down across the board. elsewhere, it's kind of just difficult to understand like what the particular issue plaguing Black Hills Gas is in this upstream situation.
Yeah, they've during the meeting with UCA and myself, they just seemed to indicate that it was their purchasing schedule that was causing this. And I didn't really get a whole lot beyond that. I know Atmos is down. CNG even filed an amended to say that they were down.
Okay.
But
Yeah, I
I'm
guess
not aware of
it's
anything specific. No.
yeah, I guess it's hard to know since as you point out, they just moved to a quarterly filing schedule. You know, was it always this, I guess, lumpy? I would say, and it's just showing up because they started filing quarterly, or is there actually some new issue going on that caused it to increase when it hadn't before? Is a bit unknown, but perhaps as we move forward, we can get some more information about that. I appreciate you meeting with them and trying to get to the bottom of this. I agree with you. It raises some alarm when everyone else's are going down, especially in Q3, and theirs went up. But I agree with your recommendation, Mr. Duncan. Thank you. And did you just want to hit item 8 for us while we're here? Does that work for you?
Yeah, that
Okay.
would be.
Since we have you. So item 8 is proceeding number 24L-0278ST, which is Public Service Company of Colorado's steam cost adjustment.
So on June 14th, Public Service Company filed their quarterly steam cost adjustment. They're requesting approximately $116,000 rate increase, slight one, a lot smaller than Black Hills, but they have fewer customers. And this appears to be largely due to a decrease in the deferred balance. In Q2, they had a quite large overcollection. They were overcollected about 2.8 million. So they were overcollected to the point where their SCA rate was negative. And this quarter, they're reporting that they're merely overcollected about $1.5 million. And there's some slight changes to the commodity costs, but it appears that the rising costs are mostly just due to the change in deferred balance and the consequences of having a negative SCA rate in Q2. Do you have any questions, or would you like me to get to my recommendation?
Go ahead with the recommendation, then we'll go to Commissioner Plant.
Staff recommends that the application be deemed complete, to grant the company's requested less than statutory notice, and to grant the application.
Go ahead, Commissioner Plant.
I agree with the recommendation.
I also agree with the recommendation, Mr. Duncan. Thank you.
Thank you.
Appreciate it. Last item on our agenda was item 7, proceeding 24A-0239 SEG, Public Service Company of Colorado, authorization for increase in short-term debt authority and extension of maturity date. Ms. Segala.
Good morning, Commissioners. I'm Fiona Segala from your Economics section. This proceeding, 24A-0239 SEG, is an application for commission authorization to amend an existing securities authority. Periodically, utilities seek commission approval to issue debt in accordance with Colorado Revised Statutes 40-1-104. On January 10th, 2024, by decision number C-24-0020, the Commission approved Public Services verified application to issue securities in proceeding number 23A-0600 SEG. That authorization limited the amount of short-term debt and unsecured long-term notes to a total of $800 million at any one time outstanding. In total, the company was authorized to issue and sell debt securities at the company's option and in any combination, not to exceed $2.5 billion through December 31st, 2026. The current application, filed by the company on May 29th and amended on June 12th, will amend that prior authorization by making two changes. First, Public Service wants to increase its short-term debt authority by $400 million. That will increase its authority to issue unsecured revolving credit agreements from $800 million to $1.2 billion. Second, Public Service wants to extend the authorization period for long-term debt agreements. The Commission's current authorization is through December 31st, 2026. The company wants to extend that authority through December 31st, 2029. Even with these changes, the requested authority to issue and sell debt securities will not exceed $2.5 billion. Other authorizations granted by the prior securities decision number C240020 would be maintained and not modified. The company says that it is seeking this increased authority to finance the roughly $4.9 billion of incremental investment approved for the Colorado Resource Plan in proceeding number 21A0141E. Before you today is whether to grant or deny the application. I can pause here for questions or I can provide my recommendation.
Go ahead with your recommendation.
Advisors have reviewed the application and have no issues as amended. Advisors recommend the Commission approve the filing as amended.
Commissioner Plant?
I agree with the recommendation.
I also agree with the recommendation, Ms. Scott.
Thank you.
All right, well, that does it for our agenda today. Commissioner Plant, anything as we close out?
I have nothing else. Thank you.
I did just have one update for those who are still with us. Typically, we've been doing the first Commission Weekly meeting of the month in person. That will be different for July, so I just wanted to give a heads up. Being that it is the day before the July 4th holiday, we will not be having an in-person meeting on July 3rd. We will be having a virtual format, normal Commissioner Weekly meeting, but it will not be in person in our offices. However, later in the month, on July 24th, we will hold an in-person Commission Weekly meeting. So just wanted to update everyone as to that change in July. So we will see y'all on the internet next Wednesday instead of in person. Didn't want anyone to show up and not realize that change due to the holiday. So that's all I have. Thank you for joining us. Enjoy the rest of your day.